Hello, everyone, and welcome back to our stock market learning channel. I hope you are doing well. Before we begin, here is a quick disclaimer. This video is created purely for educational and informational purposes. I am not a SEBI registered investment advisor, research analyst, or portfolio manager. The content shared in this video should not be considered investment advice or a recommendation to buy or sell any stock. The stock market investments are subjected to market risks. Please do your own research and consult a SEBI registered financial advisor before making any investment decisions. Now, let's get started with today's topic, history of stock market. Have you ever wondered how the stock market actually began? Who invented it? Was it created by a government, a businessman, or a bank? The answer is none of them. The stock market was not invented overnight. It evolved because business need large amounts of money to grow, and ordinary people wanted opportunities to invest and earn from those business. Let's travel back more than 400 years. The beginning, the spice trade. Around the year 1600, European merchants wanted to import valuable spices such as pepper, cloves, and nutmeg from Indonesia. At that time, spices were extremely expensive and in high demand across Europe. However, there was one major challenge. Sending a ship across the ocean required a huge investment. The journey was risky. The ship could sink in a storm, pirates could attack, or business might return with little or no profit. No single person wanted to take such a huge financial risk alone. So, the merchants came up with a brilliant solution. Instead of collecting money from one wealthy investor, they collected smaller amounts from many people. In return, every investor received a certificate that represented ownership in the business. This ownership certificate became known as share. In 1602, the Dutch Indian East India Company offered this share to the public. This is widely considered the world's first initial public offering (IPO). If the company made profits, investors also shared those profits. This marked the beginning of what we now call the stock market. The world's first stock exchange. As more people started buying and selling shares, there was a need for a common marketplace. This led to the establishment of the Amsterdam Stock Exchange, widely recognized as the world's first official stock exchange. For the first time, investors had a dedicated place to trade shares in an organized manner. The story of America. Now let's move to the United States. In New York, traders used to meet under a large buttonwood tree to buy and sell shares. On 17th May 1792, 24 traders signed an agreement to follow common trading rules. This became famous as Buttonwood Agreement. Over time, this small gathering grew into the New York Stock Exchange (NYSE), which is now one of the largest and most respected stock exchanges in the world. Now let's come to India. During the 1840s, around 22 stockbrokers used to gather under a banyan tree in Bombay, now known as Mumbai. As trading increased, they realized the need for a formal organization. In 1875, they established the Native Share Stockbrokers Association. Today, we know it as Bombay Stock Exchange, the oldest stock exchange in Asia and one of the most important financial markets in India. Yes. After that, the modern era, from papers to digital investing. In early days, investors received physical paper share certificates. Traders were executed manually, and broker would announce prices loudly on the trading floor. The entire process was slow and time consuming. With technological advancement, everything changed. Today, shares are held electronically in Demat account. You no longer need paper certificates. Using a smartphone and an internet connection, you can buy or sell shares within seconds from anywhere. This has made investing easier, faster, and more accessible than ever before. Let's move to the key takeaway. The stock market was not created for gambling or speculation. Its original purpose was to help business raise capital for growth while giving ordinary people an opportunity to become shareholders or participate in that growth. When companies succeed, shareholders also have the potential to benefit. This is true purpose of stock exchange market. I hope this video helped you understand how the stock market started and how it has evolved over the years. In our next class, we'll continue with another important topic and build your stock market knowledge step by step. If you found this video useful, please like, share, and subscribe to the channel. Also press the bell icon so you don't miss our upcoming classes. Thank you for watching. See you in the next class.